York Angelo posted this video, AMC stock reversed stock split. He turned off the comments, and a lot of people are commenting on the video that I posted earlier today saying, why is he saying this? Well, it's like, be careful what you wish for, because I don't know how long he's been an investor, but it's pretty clear you should know that this is not a good thing. And I'm not trying to bash him personally. I'm not trying to bash what he does. Cool, he provides information to people. That's all fine. I don't comment on other people's channels or personally. I just want to clear the air on how this is not really a positive thing and not something you should actually be hoping happens or trying to make happen. So with that being said, let's dive into this video. Hit the like button for me, consider subscribing to the channel, and comment down below what is your opinion on this after you do hear my thoughts and the facts around this situation. So getting into this, why do stocks do reverse stock splits anyways? And this says, is a reverse stock split good or bad for investors? A reverse stock split could raise the share price enough to continue trading on the exchange. If a company's share price is too low, it's possible investors may steer clear of the stock out of fear that it's a bad buy. There may be a perception that the low price reflects a struggling or unproven company. So if you guys are unaware, right, to be listed on the NASDAQ, you have to remain above $1 for 2 weeks out of the 52-week year. So that's really where you see a lot of reverse stock splits, is when stocks have to do this to remain on the exchanges. But throughout my 5 years of investing, or so, almost 5 years now, it's not a positive thing. After the stock split, I've had many penny stocks that have done these reverse splits to stay listed, and they always go back down. And that's what inevitably happens to penny stocks, is they do one split and then they have to do another one the next year, and then another one, and then another one, and then there's not enough shares to keep splitting over and over and over again because they just keep going down. And in this day and age of the markets too, it's more like a buy the rumor, sell the news kind of event. So yes, let's say AMC is trading at $20 per share. You will, lose 3 shares. You will gain 1 share. The share price will go to $60. But you guys got to think about it like this. If shorts wanted to short the stock at 20, you think they would want to short it at 60, right? The stock would go down. There's no arguing on that. Now, Angelo is right to a certain extent about synthetic shares. If there is synthetic shares, a bunch of them outstanding, then you'd kind of get like a share recount in a weird way. But would that cause the Moass? I've never seen it before. I've never seen a reverse stock split cause a short squeeze in general. So I don't think so. Is it possible? Sure, it's probably possible. It does say, do you lose money on a reverse split? When a company completes a reverse stock split, each outstanding share of the company is converted into a fraction of a share. Investors may lose money as a result of fluctuations in trading prices following the stock splits. So that's that. But I think it's more important to talk about an actual stock split, because that's what is good. And I don't think AMC obviously would do that because their stock price is down. They should have done this when the stock was like $70. And that does the opposite. Instead of taking away shares with a reverse stock split, you add shares. So when you stock split, like Tesla has done, people call on Amazon and Google to do this. Who else did this? Nvidia, I believe. There's been a couple over the past year. And why companies do this is because their stock prices went up so much. Let's say Apple's at $400. I believe that's where they were at. $400. They did a 4-for-1 stock split. So that means the stock price went down to $100. And that kind of validates its market cap. It's a lot harder for Apple right now to go from 100 to 50 comparatively to before they split. It's a lot easier for Apple to go from 400 to 200. It's a lot of psychological things here. Hopefully that makes some sense to you guys. When you do these reverse stock splits, it's a lot easier for the stock to go down. When you have stock splits, it's a lot easier for the price of the stock to at least remain a little less volatile right? Not go down as much, just like you see with Apple. A $10 move in Apple now is ridiculous, is a big deal, and people talk about that. Whereas before, when Apple, was pre-split, a $40 move in Apple could happen every month or so. So that's really the two main differences. Reverse stock splits are not good. Stock splits are good. You don't see good company. Let me put it to you guys like this. You don't see good companies doing reverse stock splits. Name me one company. GE, they did a reverse stock split because they had billions of shares outstanding. That makes sense. They've been around for hundreds of years. But to do a stock split, all good companies do stock splits. Tesla, a lot of people, like I said, Amazon, people want Amazon to do that. Nvidia, Tesla. So you guys get the idea. Stock splits good, reverse stock splits bad. Because if AMC went to 60 right now, shorts could just keep knocking it back down to 20. And then you would actually lose a lot more money because now you have less shares outstanding. So that's my thoughts on that. That's really what you guys need to know. It's not a positive thing to do a reverse stock split. When AMC goes to 70, 100, sure, do a reverse stock split. But if you've been in the markets for even a couple years and you've invested in penny stocks, you know that that's what stocks do to stay listed on the exchange, besides rare cases like GE. So not trying to bash, Angelo here. I'm just trying to set the expectations straight for all of you guys, because that's what matters. Who cares what's right or wrong with what they put out in videos? That does not matter. I don't care about that. All I watch videos for is the opinion, but I don't want something that is a negative to start circulating around the community like it should happen, and that it's a positive. Because trust me, you don't want that to happen. At least you don't want it to happen right now. And really, you don't want it to happen in general. If AMC does start to pivot and they become a super stellar fundamental business, then sure, reverse stock split might make sense because they do have 500 million shares outstanding. But as far as right now, no, that's not something that I want to see people promoting. That would definitely cost you guys a good 20, 30, 40, 50% if that were to happen. If we did theoretically go to 60 with a reverse stock split, the stock would probably fall back down to at least $30, if not $20 again. So that is my thoughts on the situation. That is the facts behind it. Reverse stock splits, no bueno, not good. Stock splits are good if the business does, or the share price does start to go up. Imagine, last thing I'm going to say about this, imagine with a stock split, if AMC went to $100 per share, you do a stock split. So now you get more shares, but the stock is now at $25 per share. It's a lot harder for the stock to go down 50%, go down to $12.50 when the stock's at 25, rather than for the stock to go down 50% when it just ran up to 100 to go down to 50. A lot easier for that to happen. So I'm trying to make this make sense logically to you guys. Let me know if I did a good job. If I did not, I will do this more thought out and more methodical, because I didn't really plan on making this video. I honestly don't feel the best today. So that's my take on the situation. That's what you guys need to know. That is the facts behind it. Hit that like button for me. Consider subscribing to the channel, and let me know what you think about this down below in the comment section. Love and appreciate you guys. Thank you for watching. I will see you in the next one.